Good morning. Welcome back to the Forex Lounge Fundamental Extras. This is for April 28th, 2010. Welcome back, one and all. Great that you could join us. Today, Bloomberg.com has reported two very big pieces of news. On Bloomberg.com, we read, Federal Reserve officials restated their intention to keep the benchmark interest rate near zero for an extended period and saw signs of life in the job market. The labor market is beginning to improve, the Federal Open Market Committee said in a statement today in Washington, after last month saying it was stabilizing. Officials also said growth in household spending has picked up recently. And in more news, New Zealand Central Bank kept its benchmark interest rate unchanged at a record low amid elevated risks to the global economy and indicated borrowing costs may not need to be increased as much in the previous cycles. Quote, the New Zealand economy is recovering broadly as expected, Reserve Bank Governor Alan Bullard said in a statement in Wellington today. After maintaining the official cash rate at 2.5%, he continues, at the same time, risks to the global outlook remain elevated. So we read two pieces of news. The Federal Reserve leaves rates unchanged. That was as expected at the 0 to 0.25% area. Reserve Bank of New Zealand leaves rates also unchanged as expected at 2.5%. Now, the following chart shows us a blue line. Those are interest rates in the U.S., 0 to 0.25%. The violet line represents the 12-month moving average. We can see we have not changed since the Fed has cut rates going back to late 2008. Interest rates have been maintained at record low levels. Compare now the FOMC, those are interest rates near the zero level, to the violet line, that's the Dow Jones Industrial Average. Historically, low interest rate environment is good for the stock market. As it's cheaper to borrow money, well, the stock market tends to go up. As the stock market and the economy tends to recover, the Federal Reserve raises rates, and that tends to cool the economy down. Historically, we've seen a very positive correlation. Now, recently, Federal Reserve keeping rates very low, while the stock market has had a really tremendous move to the upside. This is based on monthly charts. So far, Federal Reserve, again, not raising rates. Now, compare the Federal Reserve interest rates, that's the blue line, to the dollar-Swissy currency pair. Also strong correlation. Currency capital tends to move in those currencies with higher yielding interest rates. Therefore, when the Federal Reserve raises rates, the dollar tends to go up. When the Federal Reserve cuts rates, the dollar-Swissy and other dollar crosses tend to go down. Therefore, if we see the Federal Reserve start to raise rates, we would certainly expect the dollar to move up. Or if we consider it the other way, if we see the dollar move up to a great degree, this may be an early sign of maybe a Fed hike to come. But that has not been indicated so far. That was in the U.S. Now, we also know the Reserve Bank of Australia keeping rates at 2.5% record lows as well. That's the blue line. The violet line represents the 12-month average. So far, Reserve Bank of New Zealand has not raised interest rates since cutting them to record lows going back to late last year. Compare now the Reserve Bank of New Zealand keeping, again, rates near the 2.5% area. The NZGI, that's the New Zealand Equity Index. There's a positive correlation as well. During strong times, during strong economies, when the Reserve Bank of New Zealand raises rates, the NZGI tends to move up. However, as the economy weakens or has weakened in the past, Reserve Bank of New Zealand cuts rates, the NZGI has sold off as well. We can also compare the Reserve Bank of New Zealand, again, 2.5%, to the Kiwi dollar currency pair. Now, of course, it's not a completely fair comparison as there's two currencies within a currency pair like the Kiwi dollar. However, generally speaking, during strong economic times in New Zealand, when the Reserve Bank of New Zealand raises rates, we can see by the blue line, the New Zealand dollar against the US dollar, the Kiwi dollar currency pair tends to go up. If we see the New Zealand dollar start to really rally to the upside, this may be an early indication of maybe the Reserve Bank of New Zealand will raise rates. That has not occurred quite yet, though. We can also compare the Kiwi dollar currency pair, that's the violet line, to the blue line, that's the NZGI gross index. Compare the Kiwi dollar to its own equity market. Very strong positive correlation as well. During strong times, when capital tends to move in those higher yielding currency pairs, it also tends to move into equity markets such as the NZGI gross index. If you have any questions, email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.